chemical industry reveals that they believe the space is a consistent value creator with a positive outlook. We speak to Rajendra Gogri, the chairman and MD of Aarti Industries, to get a sense of the ground situation. Mr. Gogri, good morning and happy speaking to you here on the channel. I want to start by asking you about the demand itself. Has the China plus one factor, is it still working out for the industry? And how is the demand now compared to, say, what it was a few months ago?
Yeah, China plus one for chemical industry is actually going on for last few years. But there is no competition like, Vietnam, Bangladesh, Malaysia. It is generally China plus one for chemical is generally coming to India, especially for specialty chemicals. And progressively that is increasing and we see more and more demand coming to India.
Some numbers to it. Can you put some numbers? I mean, how much is the demand compared to how much can your revenues be in Q4 compared to Q4 last year, or even compared to Q3?
Yeah, basically all this is more of a macro factor depending on the capacity how you are able to put. So overall, virtually we are seeing a pre-COVID demand now in Q4 or maybe Q1 of next year. So that most of the discretionary sector demand has picked up back.
So are you, what is your capacity utilization? Will you put in more capacity?
Yeah, we are in a capex mode and we see that, what McKinsey report has said. Similarly, we are seeing a lot of opportunities. So we see 1,000 crore plus capex for at least next 3-4 years.
So what would all of this mean for your earnings? Because in the 9 months of FY21, you've done about a 6% single-digit revenue growth. For the full year, what are we looking at, and what is the expectation in FY22?
Yeah, this year, we'll have overall some growth in top line, but the bottom line will be flattish this year. Next year, I think we see 20% plus growth in both top line as well as bottom line.
This capex of 1,000 crore, you said over 3-4 years. So every year some 250-300 crore?
No, every year 1,000 crore.
Oh, wow. Very good. Okay. And what will this take? Will double your capacity? What does it do to your capacity?
Yeah, we are going to introduce a lot of new products also and also expand in our existing product range.
Can you give some details? I mean, is it part of PLI? Which products are these?
No, right now, this pharma PLI, we are not directly participating, but this pharma PLI is going to benefit general chemical industry also. Like product like para-aminophenol, which is paracetamol intermediate, has got PLI. So we make PNCB, which is a raw material of para-aminophenol.
Okay.
So this pharma PLI is going to help across the chemical industry. Okay. And we see some PLI coming in for chemical also in next few months, hopefully.
Okay. So this 20% plus growth that you are targeting for FY22, how much of it will come from the domestic market, how much from export market, and which is the segment that could deliver the most?
Yeah, I think we are generally around 40-45% on the export and about 60% domestic. And the major growth will come on this discretionary side, which was very badly hit especially in the first quarter of FY21.
What is the capacity?
On textile polymers and all that.
Okay. What's the capacity utilization now?
Depending on the various segments, some product plant we have just commissioned. So, but for our other plants, we are running at more of 80-90%, and some plants we have been just commissioned, which are more on 20-30%, which will get ramped up in next 2-3 years.
Okay, Mr. Gogri, also wanted to know what is the the plans for the demerger of the pharma segment.
Yeah, that we have set up a committee to study that demerger of pharma, because pharma is generally we have a separate manufacturing facility and separate customer base chemistry. So currently we have set up a committee and then we will decide the way forward.
Okay, well, all right, we will leave it at that. Mr. Gogri, thanks a lot for joining us and giving us your view. So that's the word coming in from Aarti Industries. They said demand has definitely picked up, especially in the discretionary sector, and they have come back to pre-COVID levels in terms of demand. A look at the past financials. First up, the revenue on your screen. It has been pretty lumpy actually for them. FY19 was the best year, following which they sort of came off, but they've made up a lot of it in 9 months FY21, and EBITDA has been steady state for them. Finally, the profit after tax picture will also come up for you on your screen.
Okay. Well, Prakash,